Okay, good morning, everyone. Thanks for joining all of us here, and we've got a great day. Presentations. I'm glad to be invited again. Thanks for having me, David and Anka. We're going to talk about automated options trading, why it's good for your mental health, and we're going to look at a unique strategy, a proprietary strategy you've not seen before. So no more screen watching and babysitting your trades. Let's overcome emotions with our proprietary technology. We're going to look at pre-built option strategies with automated risk and profit controls. We'll look at non-directional strategies, directional strategies, and we're going to show you the most unique trade alerts you've ever seen. They're one-touch trade alerts. And thanks again for having me. Love these events here with Synergy Traders. I always like to jump in as much as I can on the other presentations too, learn a lot. Remember, we're speculating though, and with speculation, there is always risk. So take a moment and look at the risk disclosure, please. Keep in mind here that all funds committed when you're trading should be risk capital. Past performance is no guarantee of future results. So here's a chart, could be any market, any time frame. How do you trade this? How do you trade that chop? Well, we don't even try. We're going to look at a completely different approach to trading. We're going to look at trading stock index options using proprietary automation. This is our focus on the stock index options. And we're going to show you why there's some advantages for that. And you want to end up like this robot here with all your orders and your trading taken care of for you, not struggling like this poor chap here. We are Altivest. Since 1997, we've been trading futures and futures options as a brokerage firm. We've traded literally tens of millions of contracts over the years. There we are on the trading floor, S&P 500 options pit with some of our staff a few years back. In fact, it doesn't look like that now at all. The machines have taken over, but we'll show you a little bit about that. We're registered with the CFTC, a member of the NFA, located in California. So we're in a highly regulated industry. And there's a picture I took years ago, kind of blurry, but I still kind of like it. That was down on the trading floor in New York. I think that was the coffee, sugar, cocoa exchange. And you might have seen us, so we're occasionally on various periodicals. Here we are on Market Watch just last month, getting quoted about our opinion on some of the markets. So we've got a footprint, and maybe you've seen us in some of our other presentations. Glad you could be here. But really, don't be this guy. Don't be this loner in the basement trading by yourself and trying to figure everything out. Use our experience. We've been doing this for decades, and we've spent millions of dollars on developing our proprietary technologies. And we're going to show you that here in just a minute. I am Erik Gebhard. I've been doing this since 1991, co-founder of Altivest. I have my BS in Business Administration from the University of Southern California. Maybe some of you might have seen some of our presentations. We've done a few things in the last couple of years in particular. We used to do all this in person, but of course that changed, as we all know why. So maybe you've seen some of these, maybe not, but that's okay. Glad you could be here. I started in mutual funds and annuities in securities back in the early 90s, had my Series 6 and 63 securities licenses. Then I got my Series 3 commodity futures license and also my Series 65, which is an investment advisor law exam. All right, let's jump into it. 3 common barriers. I want you all to just kind of think about this and how many of you can relate to these hurdles that we have to try to jump. Of course, metaphorically speaking, when we're trading. So how do you trade in an environment? And maybe you're going to day trade. All right. Is it true that only 1% of day traders are profitable? Well, let's take a look at that. Here's an article, The Day Trading Pandemic. Look here, Charles Schwab analyzed their active trading accounts over a 6-year period, found that active traders substantially underperformed a simple low-cost indexed fund. The most active traders were the worst returns. Here's a study out of Taiwan, 15-year period, less than 1% of day traders consistently beat the market, 80% lost money. And then here out of Brazil, 3% of the traders made money. So something to think about. And look at this, even active fund managers, 79% in 2021 underperformed their benchmarks. And over 10 years, 80%, 86% of active fund managers underperform. So even the professionals have a difficult time with this. And look to social media for help. I don't know about that. If you want to be popular on social media, you've got to always be bullish. You know, like this guy here found a glitch in the stock market. Looks like a high school chap there. And I don't know, you're going to trust this guy for your advice. Meanwhile, day trader army loses all the money it made in the meme stock era. This was interesting. Amateur investors jumped in when the lockdown began. They've given back all their once gains here, according to an estimate by Morgan Stanley. So that day trader army is now broke. And here's an example. This guy said he got 500,000 from his parents to invest in the stock market. And now here's his account down 96%. Of course, who knows if that's true or not, but let's avoid that anyway. And do we listen to the people on TV? Jim Cramer. I don't know if I'm picking on him or not, but you know, certainly he's well known. Here he is here in March saying the bear market is over. And this is when he said it here. And we've since dropped 23% since he said that. That's a huge drawdown to sit on and just meanwhile think that you're right. So we're going to try to avoid that, folks. You don't want to trade based on narratives and stories. That's just like trading out, you know, with a fairy tale at your back. That's not going to work in the long run. So even if you are trading on your own, are you beating the market? Are you doing better than the market? Here's a great little piece from Mark Skousen, an economist. They did a simulated trading environment here with 100 monkey portfolios. Looks like 96% of the monkey portfolios beat a generic cap-weighted index by an average of 1.7% per year. So there is your best trader right there. So keep that in mind. I thought that was always makes me laugh whenever we see monkeys and apes and things like that. Okay, so number 3, the third hurdle, emotions. This is really what the whole event the last few days and today is about. How to trade and overcome your emotions, control your emotions. Remember, markets are always correct and we aren't. Can be expensive trying to convince the markets that you are correct. From Ed Sequoia, great book, Market Wizards. You don't want to go down fighting thinking that you were correct and the market was wrong. So you want to avoid this roller coaster. You don't want to have all these feelings and sit in front of your screen every day. That will basically make you old quick. So you want to avoid all this euphoria and panic and despondency and optimism and this, you know, jump off that roller coaster. And there's a lot of noise. It's difficult to do. You get bulls, bears, you get pundits, neighbors, friends, whatever, people at church, people in your gym, whatever, they're all talking. But it turns out we can really become our own worst financial enemy. Motley Fool has a great little piece here. Won't go into all the details, but it says our worst financial enemy is ourselves. I think there's a lot of truth to that. Something called confirmation bias, anchoring bias, recency bias. And I think this one here meme kind of summarizes all of it. So when things are going well, we all think we're a genius. So we've all been there. But remember, algo trading is now dominating the landscape with no emotion and no bias. JP Morgan says that 90% of the US equity trading volume is machine driven, high frequency trading, large institutions, you name it. It's all machine driven these days. It's not necessarily people like us behind their screens. I mean, there's a certain component, but and it did get that actually did get active during that meme stock era more so. But this really is your competition. Robots are outwitting humans on their investment picks. So we're here now in this evolutionary thread. Here's what it used to look like. I won't play this little grainy video I took years ago. We're limited on time, but here's our competition. No emotion, it runs automatically, built-in risk controls. Really, this is what you're competing against here. So how can we easily use algo-driven option spreads for up, down, sideways markets? That's what we're talking about. Automated options, strategies for all those market conditions, including bearish strategies. But first, let's jump into how we would trade options like an insurance company. Well, we know insurance companies make lots of money, and that's because we pay the premiums to them. They're essentially selling time and managing time. They insure themselves by hedging They're consistent and patient in their model. They look at probabilities, favorable long-term odds. Quite frankly, they're just looking at math. It's just that simple: statistics, actuarials, and math, just like a casino. You bet on that green on the roulette wheel, you do it enough times, and you're going to lose $5.26 on average per spin. And that's the house edge. Your losses become the house winnings. And the casino wants you there as long as you can play. The longer you play, the more likely they're going to make money off you. Look at this. Nevada casinos report 9 straight months of 1 billion house winnings. So that's higher probability trading there. So how can you be the house when trading options? That's really what we're going to dig into in the demo here. I'm going to jump into that in just a minute. I thought a little humor might be good here. I think a lot of option traders like to think of it this way. It's not gambling, it's just options trading. It's classy. So maybe there's a little bit of truth to that at times. But so high probability strategies, what are they? Let's look at these. Just a second here. We're collecting premiums. We call it base hit, to use a baseball analogy, by going short options. We're consistent and patient, and we're going to manage that risk, expecting to have losing trades. And manage reward, just as important. Don't get greedy. Need the proper tools to make this happen. And we're going to look at trying to generate base hits. We're not swinging for the fences and trying to hit a grand slam. So we're going to look at premium collection with non-directional bullish and bearish strategies. We'll look at these higher probability outcomes. And all these trades have predetermined risk. These are called credit spreads. And again, each position is insured or hedged, predetermined outcome in terms of risk or reward, and they can be non-directional. And we're going to look at trading stock index options on the futures contracts. So on the E-mini, S&P 500, E-mini, NASDAQ 100, and Russell 2000, sometimes the Dow. And why do we focus on that? Well, for one, an index is always less volatile than an individual stock. And we have strategies for all directions with these indexes. Makes it much easier, of course, to track just one or two markets. I think there's 6,000 plus different equities and ETFs and securities. So here's a chart, and don't worry about this right now. I'm going to show you, but here's a big advantage. You have a wide margin of error for the strategies we look at sometimes. Here's the upper boundary of the trade, the lower boundary, and here's the underlying market, in this case, the S&P 500. If it stays in this wide range here, this trade would work out. We're going to show you that. But before, let's look at the delta. If you've heard about the Greeks and options, then you know this. It's simple. It'll take 1 minute. If not, it's still simple and it'll take 1 minute. What is the delta? It's the approximate probability of expiring in the money. And for example, if a delta is 0.25, you have a 25% chance of expiring in the money with that particular option. But conversely, a 75% chance of expiring worthless. And that's how we like to look at things. What's the chance that the option will expire out of the money or worthless? Remember, delta is always moving with price and time, so it's not static. And this is important. It is not the probability of a winning trade. So that's a key thing too to keep in mind. And there's also theta. The only two Greeks we're looking at, delta and theta. Theta is simply a reference to time decay. Remember, options are always a wasting asset or decaying asset. They all have a limited lifespan. So that's a negative number equaling 1 day of time decay. And if your option premium is at 10 points and theta is negative 0.05, the next day, the premium would slip to 9.95. And the next day after that, 9.90, and so forth, just based on theta decay, all other things remaining equal. But this is just illustration for theta decay. Here's what that looks like on a graph. As you approach time 0, the value of the premium and that option starts to drop, and becomes eventually 0. Here's an example of selling a call spread, and we'll go through this quickly, very simple. Here's the call spread we're selling. The red line is the call that you sold. You 45.50 call, you collect 4.5 points. You simultaneously bought the 45.70 call, you paid 2.25. The net result is you collected $112.50 minus your commissions, of course, and that's selling out of the money credit spread. Same kind of thing with the put spread. Here's the put spread you sold. sold the 36.60 put, you collect 3 points. You buy a 36.40 and you pay a point, but the net result is you collect 2 points or $100 minus your fees. And these are not naked options. Everything's insured and hedged. Your maximum risk is always capped in advance. That's called a covered option spread. No naked options trading or no naked creatures. So if anyone's doing naked options trading, I'd highly recommend you don't. Doing this 30 years, I've never seen anyone come out the other end of that profitable. I've seen some nasty things happen with people trading naked options. So don't do it. It'll work until it doesn't. So here's another advantage if you're doing covered spreads like we do. No margin calls. The money that you use to place the trade is all that is needed up front. And if the market goes against you, you don't have to put good money after bad and meet a margin call. That's because there's no unlimited risk with these covered spreads. Here's an iron condor. Let's look at this first thing. Kind of a crazy name. It's just a combination of the put and call spread that we saw. Very simple. Here's what it looks like. Selling out of the money call spread, selling out of the money put spread, and you're hoping the market just kind of bounces around in between those two basically parameters there. Now here's our proprietary strategy. It's a short option strategy. People have often referred to it as sort of an oddball or weird strategy, and that's a compliment really. So it's really just a variation on the condor. It's called a dragonfly. We created this years ago. It has 6 legs, and let's take a look. Here's what it looks like. Here's the call side of the trade, the put side of the trade, and here's the structure. You sell 4 calls, buy 3 further out of the money, and you buy 1 closer to the money call. And simultaneously, you do the same thing with the puts. Sell 4, buy 3 further out, and 1 closer to the money. And I'll just point out here, you notice the 4 puts that you sold here, 3,200 puts. The one that you buy is 50 points closer to the money, a 32.50. And the same with the calls. You sell these 4 calls here, the 40.60s. However, the one that you buy is 50 points closer to the money. And so this call and this put act as additional insurance, so to speak, and mitigate some of the risk in that position. And it completely changes the dynamics and the risk reward characteristics compared to a condor. And we'll show you in just a second here. So we have some unique strategies as well for bear markets, for bull markets. Here's an example. We do just a half dragonfly call spread. So you can just do the call side of a dragonfly. You don't have to do the put side as well. And that would be of course, a neutral to bearish strategy. And here's something we call a bear hedge. You're just simply selling an out of the money call spread. You collect premium for selling that call spread. And then at the same time, you use that money to buy an out of the money put spread. So if the market starts to drop a lot, then this put spread you own will gain in value, and the call spread you sold and collected premium for will lose value. And that's how that works. But here's the thing. You're thinking that's a lot to take in. How do I know which markets I'm trading, when to buy or sell, what strategy to apply? What's the timing? What's the price? How do you manage the risk, and how do you manage the profits? Well, the answer is you can't do all that very easily without a lot of help. And that's called Theta Trader. That's our proprietary technology, our software we developed. Some of our floor traders actually in that picture. I think that's a great picture. So these are pre-built option spreads. We generated a proprietary algorithm based on all of our experience. It generates these theta trades every day, automated strategies for bullish, bearish, flat market scenarios. And then we have an automated risk and profit tracking mechanism called the risk thermal indicator. It's called the RTI. So it's simple, effective option spreads and profit and risk management. So it's time to jump into the demo. So I need one moment to switch over my screen here, folks. Okay, so now you are hopefully looking at my screen, and if not, I'm sure you'll let me know. This is the Theta Trader dashboard. I guess you call it the home page for the Theta Trader platform or solution. And quite simply put, This section here would be your theta trades, where you would look for new trades every day. This section here would be your open short positions or short spreads. And I'll explain all the colors. And this is any open long or bought positions. And here's your account info. And this is integrated with your trading account, your AltaVest trading account. So Theta Trader is our technology and our trading platform at AltaVest. So everything is integrated with your AltaVest trading account. And then here's any current quotes, live quotes here. So the main thing is you'll notice there are bullish, bearish, and neutral or non-directional strategies. And these are all pre-populated, pre-built strategies. And you'll notice here the E-mini S&P 500, NASDAQ 100, and Russell 2000. So those are the markets that we're trading with Theta Trader. And we've looked at the Condor and the Dragonfly. So we'll start with that. Here is today's Theta trades. The algo has generated these particular trades for Condors today, anywhere from 16 days to 65 days till expiration. And you'll notice all the different strike prices here are pre-selected by the algorithm. This is your maximum profit potential at expiration for any one of these trades. This is called your targeted annualized return at expiration. And I want to point out it's not realistic to expect a 286% annualized return if you place this trade. This number here is really to compare one trade to another. That's why it is here. So it's really for comparing all these trades to each other. And we'll start with the July in the month. And let's drill down on that. Okay. So we're getting into the details of this particular July in the month Condor trade. And I like to look at a graph. It gives me an overhead view. Here's the call spread we're selling. Here's the put spread we're selling. And you'll see all the details here. I won't go through each one in depth, but you'll notice the days till expiration, the settlement value, the premium collected, your put risk, call risk, commissions, available capital in the account, cash required, profit potential. Here's your targeted return on cash, and then the targeted annualized return. And you'll see here that the strike prices are all populated for you automatically. Everything's completed and filled out for you. I do want to point out that you can change the strikes if you want, but you're kind of going against what the algorithm suggests. So that kind of defeats the purpose, I think. And this is a quantity of one. You can change the quantity to anything you want. You can see the cash required moving up or down based on the quantity here. Everything defaults to a quantity of one. And a sell is the default here for a Condor because you're selling the Condor. But I want to point out something here, and then I'll move on. The puts that you're selling here, the 3330, the delta is 9.89. Remember, we looked at delta. That means there's over a 90% probability that this put would expire out of the money, the one that you're selling. And here's the call, 6.92 delta. So 93% plus probability that this call option you're selling and collecting premium on is also going to expire out of the money. So these are the higher probability outcomes that we're looking for in these types of trades. And you can see here the number of points being collected. You can change that if you wanted, add a little bit of discretion on the order if you want. But for our purposes, let's jump in and say we're doing 4 of these. You'll see the cash required changes there. And we'll go ahead and place that order. And that's it. If it were a real order, it'd be placed. And if it could be filled, it'd be filled immediately. And then you'd see it show up like this as being filled in your orders. So it's just that simple to place an order. Now, here's a great feature, and I'll show you here. And be sure to ask questions and make comments along the way. I may not get to it right this second, but there will be some FAQs at the end. But I want to make sure I'm addressing all the comments and questions. But I've heard this, the same things over and over. So I think I do address them as we go. But here we have a trade simulator. And I've loaded some trades to save time. Let me squeeze that down so you can see the screen. Actually, before I do that, let me show you the dragonfly. So we did a condor. Here's a dragonfly. Here's the July end of month dragonfly. So you can see you have the 6 legs to the dragonfly here. Here's what it looks like. 3 calls and 3 puts. Let me expand that. I know when I'm watching other presentations, I like to make sure that, or at least I like the ones that have a format where everything is really large. It's easy to see because sometimes it gets kind of, you know, so detailed you can't see all the particulars. Anyway, so you can see the cash required on the dragonfly, $4,400. Your profit potential is 528. So your targeted return on cash is 11.8%. And then your targeted annualized return 66%. But you see how this, we didn't look in detail, but it is lower. A dragonfly will have typically a lower targeted return. And that's simply because, remember, you buy this call and you buy this put, and that costs you money. It's like buying additional insurance. So that drains your potential target just a little bit in terms of profits. But again, you're selling the put here, the delta 9.89, the call 6.92. So over 90% probability and 93% probability that the puts and calls you sell to someone else will expire out of the money. And here you can see the quantity defaults to 1. You're collecting over 12 points for that dragonfly. Let's go ahead and jump. Well, let's see. I want to point out this too. Cash required on the dragonfly is about $4,400 in this case, $4,800. So generally speaking, it's about $5,000 per dragonfly. And generally speaking, with the condor, it's about $1,000 per trade. So we'll jump in with maybe 2 of these dragonflies and place that order. And there you have it. Okay, so let me show you. We're going to compare the dragonfly to the condor in some simulations here. We can go backwards in time. This is a time machine for backtesting these complex strategies. This is a really great tool. I've never seen it anywhere else. And we'll start with this dragonfly placed on December 1st. And you can use these buttons here to play the trade, kind of act like you're in the trade, and you'll see each day that goes by, the trade is a little negative, then it starts turning positive here, and that's because of theta decay. Remember, we talk about that, working its magic. This RTI is green, and that color means do nothing. The computer says do nothing, let theta decay work. And you can go step by step, 1 day at a time like this. And you'll notice here, it turned blue. Blue means take profits. That's your profit taking signal. Computer says you've made enough money on that trade, get out. And I want to point out that this can be automated like a stop loss might be automated. So you can set this up in advance so that when the RTI signals blue, you don't have to be watching anything or monitoring or babysitting. The system here, the computer, the algo will place that order for you so that you can close out that trade whenever it turns blue. So that here, that dragonfly, you can see here, matured and became nicely profitable. Okay, and let's see here, January 1, just a second here. Okay, so here is the condor. I want to make sure I get the, yeah, so this is a January end of month dragonfly, and that was placed on, let's see here, December 1st. And here's the, let me go back. I think this should be the, December 1st condor. Well, you get to see how to do it here. This is how you would choose your trades. Okay, so here's the condor. We'll just go right to the end to save some time. So you can see the condor also turned profitable here, but it happened on January 15. And you compare that to the same dragonfly that happened on December 28 with 33 days left. And the point here is the Dragonfly matured much more quickly. Here's the Dragonfly, matured on December 28th, and this one matured on January 15th. So oftentimes a Dragonfly will allow you to exit trades much more earlier than a Condor. So here, let's look at another example here. I'm going to run through these quickly to save time. Here's a Condor, and here it turns red. That means get out, too much risk, and you take a loss on that Condor. Now, what would have happened if instead of a Condor, you were trading Dragonflies, that same expiration? Now look at this. It actually gave you a profit-taking signal. So instead of hanging on to this Condor, ending up taking a loss here on March 9, the Dragonfly actually matured early, and you were able to actually take a profit on that trade and get out and avoid that particular trade going against you. So again, the Dragonfly has a totally different characteristic, and we'll run through another. Here's another Condor. And by the way, these colors, yellow means a little elevated risk, orange means slightly more elevated risk. And I want to point out something too. If you're trading this without any help and the market's moving up against your position here, I think you're going to be really glued to the screen, not wondering, really wondering and worried what to do next. But the algorithm here is saying, don't do anything yet. And now it takes a loss. Okay, so with 15 days till expiration, you end up taking a loss. And that's going to happen sometimes, right? Even with higher probability outcomes. And now here's a Dragonfly for that same exact day of trading, same expiration. Will the Dragonfly do any better? Nope, it takes a loss as well. So I wanted to show you that no strategy is impervious. Every strategy, whenever there's an opportunity for profit, there's always a chance of loss as well. So I wanted to point that out. I don't want to make this sound like a Dragonfly will never lose money. But here's another trade, another Condor. This is a really fun tool to use. But this one matured here on August 20, took profits here. And we're going to do the same trade except with a Dragonfly. When I say same trade, I mean the same expiration. And that one matured here on August 4. So 2 weeks earlier, you were able to get out with a Dragonfly, take your money and go on to a different trade. And then here's a bear hedge. Remember, we looked at the dashboard and their bearish strategies here. Here's one called the bear hedge we looked at in the presentation. Show you how easy it is. If you're bearish, maybe you want to hedge, maybe you want to speculate, maybe you have a large portfolio that has long stocks, you don't want to sell them, whatever it may be. So here's what this trade looks like. You're selling this out of the money call spread and buying this out of the money put spread. We'll do a quantity here. We'll just do 3 of these. And sometimes you can do these for even money or a credit, so the trade doesn't cost you anything. And there would be your bear hedge. So let me go back to the simulator. Right, here we go. And we'll just kind of run through this one, give you an example of what that might look like. So in this case, this made a couple $1,000s for you, worked out well, the market moved in your favor with that bear hedge. Now I want to show you how to automate all this. You go into my account, you go to your settings here, and then you simply check the activate risk manager and activate profit directive. And that's all you have to do. So Theta Trader can then automatically monitor your positions. And whenever it turns blue, it will take profit. Or if it turns red, too much risk, it'll get out and take a loss. So one way or another, be out before expiration based on the algorithm and what the algorithm says to do. Here's a great help file here under my account. You go to help, go to glossary, and just an example, here's all the color coding explaining how it works on sold positions and bought positions. Here's all the strategies here. If you want to review, everything's here in the help file. There's also a great tutorial section here on video tutorial section on all the different components. There's education videos here as well, if you need a little brush up on some of these advanced strategies. But you see how simple and user-friendly it is anyway, and it's very intuitive to use. Now we'll jump right back here, go back to the home page, to the dashboard, and let's show you. I'm going to show you the best feature of all in just a second. But I also want to point out, you can see everything on your dashboard here at a glance and all the color coding. You can also go backwards in time and look at your closed positions here, see everything on one page. If you want to look at any particular trade, I'm going quickly because it's saving time, but you just click on it, see it's highlighted gray, and then you scroll down and you can see here the graph of that particular trade that was closed out. So you placed it on March 3rd and the time ticked by, and then ThetaTrader generated that blue RTI and said, get out, take your profits. And then of course, it's just that simple to go backwards in time, look at closed positions or your open positions. You can see everything on your dashboard, or you can look at everything here just on one page on your open positions. Yeah, so there we go. So you can see everything at a glance, all the colors there. Of course, it's also on the dashboard. And then one other thing too, before I forget, we have daily research called TradeScope, and people really lean on this and rely on this a lot. This is all proprietary to AltaVest and ThetaTrader. So we provide you some analysis and some guidance looking forward. That's really the main thing, is the looking forward guidance, the nowcasting, so to speak. And then we do the daily trading summary. I help write this as well. So you can see here quotes from the day, any trading activity, summary here of Asia, of Europe, and in the US, and then looking ahead, talking about the minutes from the FOMC, technical support resistance zones here, and then an economic calendar. So that's all available, all within ThetaTrader. Now let me switch gears. I want to show you the best feature of all. These are trade alerts. One-touch responsive trade alerts. All you do is touch, accept, or reject. You don't have to read an email and try to copy it somewhere else. And these are live alerts, meaning they're integrated with your AltaVest account. So you touch accept and the order is placed automatically for you. Here's what it looks like. You'll receive a text alert with a message. You click that link, takes you directly to the alert. And you'll notice, I'll stop it here. You'll notice the chart. Here's the dragonfly spread. Here's your account, the premium collecting, cash required. You're selling 5 of those dragonflies, and the quantity is already pre-selected for you and your account. And also the alerts are only going to come to you if you do not have a similar or like trade on the account already. And you can see the days till expiration, your targeted annualized return. So everything you need to see is right there. And if you like it, you just touch accept and the order flows through and we get that trade. If the market can fill it, then it'll be filled. So just that simple. So if you want some free trade alerts, you can feel free. I know this is a screenshot from GoToWebinar, but Zoom works the same way. Just put a 10-digit cell number in there and I'll grab that afterwards and we'll set you up for some trade alert demos. And you can do that. And we'll be glad to get you set up with some demos. So here we go. Here's the offer for the Synergy Traders event today. Theta Trader membership. So remember, you're going to get, of course, the Theta Trader software that we just looked at. And that includes all the features, the theta trades, the risk thermal indicator, the trade simulator, everything else, $3,588 value for that software. And then you get the one-touch trade alerts. That's all part of Theta Trader. So these trades, again, are meant for you and your account. They are live integrated alerts. So you just touch your screen to accept them, or if you don't want to, you just reject it. And then from there, you saw how we can have the RTI automatically manage the position for you. You simply check the profit directive and the risk directive, and that will automatically manage your position. Value on those alerts over $4,400. So a value of over $8,000 for your Theta Trader software and the trade alerts. And here's the thing, sometimes technology is great, but sometimes so are people, and you get us. So you get to talk to us whenever you need to, kind of a private coach. We're all Series 3 licensed and experienced traders, decades of experience. You'll have screen sharing sessions if you would like, covering any topic you want. So I think we look at it like having a co-pilot, someone over your shoulder. You can develop a relationship with us and discuss your trading philosophy, your goals, review your prior trades, look forward, whatever it may be. Invaluable service valued at least at $7,500. I know people spend $25,000, $50,000 on education. I've talked to people about it before. We've spent a lot of money on things as well, so we understand. But what we're saying is we provide you what you need to work with Theta Trader. So again, you have the software, the alerts, the private coaching valued over $15,500. And yes, kind of like one of those infomercials, you still want more. Okay, remember we have the proprietary research. We have our trade scope, and then we have our daily commentary. People love leaning on that because it's short, it's sweet, succinct. You don't have to spend hours doing research. It's all right there in front of you. And then we have the online tutorials, which I briefly told you about. Those are videos to help you out if you need it within Theta Trader. All of this together, part of your Theta Trader membership, all the software, all the personal coaching. Remember, these are experienced people. We've been doing this decades. And that value, $18,504. We did in-person events. We would do this at $4,000. People line up at the back of the room and get signed up. And we've been doing it online. We have kind of our evergreen retail pricing at $29.97 for the membership, but we're going to do a lot better than that. In fact, we've done this at $7.97, and we'll do even better than that. We like these live events, these kind of 2-3 day events. We love Synergy Traders for having us back. So 80% off that retail rate. It's one payment of $597. So your Theta Trader membership, remember, it's a one-time payment, $597. Here is the link, cf.altivest.com/TT. So take a screenshot, take a picture with your phone. That's my direct phone number. You can call. You can in fact call me now. Someone else will pick up. That's fine. If they don't pick up, it goes to my voicemail, but write that down. And you can also email me, of course, directly, Erik, E-R-I-K, @altivest.com. But remember, that's a one-time membership, one-time payment, and there's a 30-day guarantee. So you sign up and something happens, you change your mind, let us know. We'll refund that membership fee. We're not twisting your arm. That's not our business. We've been doing this 30 years. So, okay, a few FAQs. How about tax efficiency? I bet no one expected to hear this. Futures options are tax efficient. You can lower your tax rate by 10% just by trading futures options. Here's an example. If you're trading individual stocks in this example, you'll have a tax liability of $7,400, 12.6% return. That same example, trading futures options, your tax liability is only $5,360, savings of over $2,000 just because you're trading in a tax efficient landscape. So basically 60% of your gains are taxed at the long-term rate, and 40% at your personal rate. So that's the huge advantage to trading with futures options. There's also no more itemizing, no more wash sales and any of that nonsense that you have to deal with when you're trading stocks. You just get your one figure at the end of the year and you plug that into your taxes. IRAs, yes, there are some financial or experience requirements at times, so contact us for details. That we have a lot of IRAs. So absolutely, even Forbes says investing in alternative assets using a self-directed IRA might be something to consider. And why the E-minis? Well, they're liquid, they're efficient, and they're cost effective. That's why. And you didn't know this. In fact, when I thought, wow, I didn't realize that. The E-mini S&P 500, it outtrades all ETFs around the world by over 2.5 times. Bet you didn't know that. So the average daily dollar volume compared to the SPY, the E-mini is almost 10 times greater. Just the E-mini S&P. So it's an amazing marketplace. If you're not trading it, you're missing out. You need to be in this position, in a position to trade these markets. So the E-mini options, more advantages, kind of all the same theme: volume, liquidity, depth, access, superior execution. So that's what that means. If you have good volume and good liquidity, then you get the execution. It says here they offer superior execution relative to SPX options. They save $4 to $15 per contract trading the the E-mini S&P 500 options. And that's why we trade them, folks. And that's one of the reasons why, and I'll show you another item here in just a second, but that bid offer spread is very, very tight. So we also have all the strike prices we need. Densely packed strikes, 100 annual expirations, ensure granularity and coverage. And what that means is when our algorithm is searching for the strike prices it needs, it's going to find them. If you're trading individual stocks, it's not going to find these deep out of the money options that it always needs to trade. I mean, maybe in the handful of the most liquid stocks, but even then, you have the granularity and the coverage that you need. And I want to point this out. This is very important. If you're doing a dragonfly with us, your order is placed as one order at one object at one net price. If you try to do a dragonfly trading stock options, you can't do it at one order at one price with one spread. You have to do it and break it up into two separate spreads, leg into one spread, leg into the other, and then try to monitor it and leg out of it at one time. I mean, it's just a mess. It's a complete, it's just complete different environment, and a big, big advantage trading with futures options on these E-minis to be able to do this much more efficient. And then of course, we're tracking just these, one or two or three markets, not thousands. Efficient margin compared to stocks, and there's a clear cost structure. I won't go into this, but remember, these are E-mini options, futures options. These are not securities options. These are not stock options. These all trade at the CME Group, the largest futures exchange in the world. They all trade on the electronic Globex exchange. And that means every order is treated equally. If you have a 1 lot or 1,000 lot, it all gets placed through Globex and all gets treated the same. There's no payment for order flow. There's no, quote, free trading in the futures industry, because there's no such thing as free trading, folks. Robinhood says inferior trade prices costing customers $34 million. SEC fines them $65 million. People are trying to save a penny, but they end up losing a nickel. And David Einhorn, payment for order flows, just disguised commissions. So if you want the broker to work for you, you pay a commission. Nothing of value is truly ever free, because the question is, what are the commission rates? Yes, they're 5.25 round turn, all in, very competitive rates. And I want to point out too that everything in Theta Trader is net of all commission and all cost. And here's an example. This from January this year, I just took this off a big box brokerage firm. They say their rates on futures options are 2.25. Well, that's per side, okay, and that's not even including clearing and exchange fees. They don't tell you about that. That's the real fine print. So our rate is actually lower. Our total rate is lower than when you add up all of their rates. So our rates are very competitive. And again, everything is net. People want to say, well, what's the theta trader performance? Well, keep in mind we're a brokerage firm and every client trades differently. So everyone has different performance. Again, all trading costs are factored into everything within theta trader that you saw in the demo. What size of account? Dragonflies take about $5,000, condors about 1,000. Therefore, we recommend a minimum of $25,000 to do this, to be able to have that granularity and so forth in your trades. How about a free membership? People like this. You have an account of $50,000 to $99,999. We'll rebate 50% of that membership fee to you. $100,000 or more, we'll rebate the whole account membership. So people love taking us up on that offer. Remember, IRA, individual, joint, corporate, LLC, trust accounts. And just to kind of get close to wrapping it up, and then might have a chance to address a couple questions. So why would you even consider strategies like this? Well, alternatives may improve diversification and lower portfolio risk. Well, here, what's a risk? Inflation. I mean, that's eating us up, folks. Everything's in red. All the gauges are red here. And gas prices, I don't even need to go into the details. You know what's happening there. CRB index, commodity prices, just screaming higher. Business confidence is at an all-time low. Bet you didn't know that. Consumer confidence, look at here, almost down to the depths of 2008. All-time low on the expected change in financial situation 1 year out, all-time low. Consumer credit at an all-time high. So all the consumption now here, bulk of that is on credit. Everyone is maxing out their credit cards ahead of the recession. Adjustable rate mortgage demand surging to 14-year high. Home buyers trying to afford a pricey market. Look at this here. New price, the home prices here are just soaring. Meanwhile, the sales are now starting to really collapse. And here, this was interesting. In 2019, a $300,000 home had a payment of $1,200, and now it's almost $2,000. That is just enormous percentage rate of change there. This is how much the payments are appreciating here. The Fed always screws up. U.S. stocks in a bear market by summer, according to this article, and this gentleman, Keith McCullough, says, I don't think the Fed can get away with much more than 2 rate hikes. They're going to keep tightening as the markets are going down. And so here we go. The market's been expecting up to 10 hikes this year. And of course, the stock market's been dropping since then. But meanwhile, you still have 7 hikes expected till the end of the year. This is kind of a joke here. Powell says the QE won't cause inflation. Well, some inflation, but transitory. Well, what we're peaking? Well, maybe not peaking. No worries. Well, there'll be negative growth, but no recession. Okay, recession, but you won't lose your home. Well, you may lose your home, but you won't starve. I mean, kind of a joke, a little dark humor, but keep in mind, all these Fed FOC members, they're all academics. They've never had jobs outside of academia and government. Look at this here, all of them, no jobs outside of the Fed. Here's one as a consultant. But anyway, Goldman says high risk of recession, cutting their growth forecast. U.S. economy contracted even more than expected first quarter, raising odds of a recession. GDP forecast cut. Here's the stock market to GDP, the Buffett indicator. Here's where we were just last month or two. But we see we've taken a little bit of the froth out, but still we're very highly elevated. This is interesting here. See this green line? That's your exponential growth trend. And look how high we are above that. So when things mean revert, see this here? Everything mean reverts at some point. That's not going to look good, folks. Stagflation. This is interesting here, raising the risk of a lost decade for that 60-40 portfolio. Next 10 years don't look good. Anyway, it's not all doom and gloom, but I just want to point out that some of these here are suggesting S&P produces a return of minus 4.2% in the next decade. And I'll skip through this here. So we like a correlation, non-correlated event here, trading that we do. You want to sidestep the bear markets. You can see these periods where the market's flat, decades at a time. I'll just have to go through this quickly, but if you're down 40%, you've got to get a 67% return just to get break even. You can see periods here, 22-year, 25, 17, 12-year periods of time, where the Dow is flat. So we don't always go straight up, folks. It's not always a good idea to just buy and hold and passively wait for things to go your way. So we like a slice of that alternative pie. So we love the idea of having some exposure to alternatives. You simply complete the order form, and then we'll get you set up and onboarded with ThetaTrader and your account. So there is the last slide, and I think looks like some questions coming in. Okay. Yeah, give us a call if you want to talk about the trade alerts more. I see some comments and questions on that and the averages and so forth. And I see our link posted there. Yep, that's my phone number. And Erik, E-R-I-K, @altivest.com. You can also email directly. And yes, this is our technology, so you have to trade with us. You have an account with Altivest. We've been doing this since 1997. So thank you for that question. And let me see here. Let me point out a couple other things real quickly. I think I've got just another minute or so. And someone's asking why the strategies work in bear and bull markets. Well, it's just the way the math works with the strategies. So if you have a bullish outlook, then you'd want to use some of the strategies that are dedicated for that particular outlook. And if the market moves in your favor, then of course, those bullish strategies should tend to do well. And the non-directional strategies are designed to work well in markets that are sort of choppy. They give you a wide margin of error. But certainly the best thing to do is, what you can do also is use ThetaTrader and use those trade alerts and use sort of the simulator is what I was going to say to help backtest items. So anyway, with that said, I think we are out of time and we're going to wrap it up. So thanks for your time and look forward to having you on board with us. If you have any questions, call me directly or email, and we'd be glad to help you out. And that special offer is good till tomorrow evening. So let me know what you need. Thanks.